Hey guys, Mike here. So, oh boy, what another green day in the market, especially for small caps. I'll give them another oh boy because they just keep getting pushed higher and higher. And I'm going to show you, man, the money flowing in to these stocks, these indexes is incredible, right? I mean, and again, the pause rally. I didn't do two members videos on it for nothing. It really is a real thing. I'm actually going to go back and do more research and figure out when they do these pauses in the past, how many of them have been coming into December, which is, I mean, the fourth quarter. I've showed you guys how powerful the fourth quarter is anyway, because the hedge funds are trying to make their bonuses and make their returns look much better than what they really are, to be honest with you. And so, I'll let you guys know what I find on that and stuff. But, that's what you're seeing, that just melting together, that fuel, right, coming in. But we're also going to look at the index charts and say, are we getting overstretched here, you think, right? Are we getting a little overstretched? And I'll show you what I'm talking about when I say overstretched. And understand, we are coming in, next week, obviously, is the holiday week, right? So it's going to be a shorter week, less participation, okay? And so, might want to be careful if you plan on getting on any positions, because next week is a tricky one right now. Just because there's less participation, if the majority of that participation wants the markets to keep pushing higher, it's easier to push them higher, right? So there's just less people fighting you on it, right? Versus, of course, if they want to sell it off and people want to start just taking profits or whatever it is, which you would think people are up huge right now, that they would do that. Again, we'll have to see. Maybe they want to wait till beginning of January to do that, so they don't have to pay the taxes on it. Depends on if they got losses or not to offset them or not. That's a whole different thing. Let me know in the comments if you're doing any of that. And so we'll get into all that. But I did want to say, anytime I have any housing market data, I tend to like to put it out to you just to update you on there, on this subject at least. And you can see, surprisingly, housing starts were unexpectedly up 14.8%, right? Which was a big surprise, right? I mean, what else do you got going on? Surprisingly, you had new listings, right? They went up as well. So they're coming up. And you're like, hey, this is great. That means what? That means more inventory and stuff will be hitting the markets. That's great. Here's the problem, though, and here's what has to change for this to really mean anything. You have to have buyers, right? So if you look at prospective buyers, it's pretty much near almost an all-time low, right? This really isn't increasing because rates are still high and prices are way higher than they were just 2 years ago, right? What else is happening? You're having these home purchases fall through, right? Monthly pending home sales that fell out of the contract, a percentage of overall pending home sales. You can see it keeps going up, and now it's sitting around 17%. So that needs to improve. But again, what a lot of people don't look at when they're buying a home is they're just looking at what the mortgage and interest rates are. They're not looking at everything else, right? And all the hidden costs, right? Your property taxes, your homeowner's insurance, all the upkeep you're going to have. And yes, there's going to be upkeep. Some is going to be very expensive. For example, in my neighborhood, because in Florida, if you're moving here, make sure you do your homework, because you're going to have to do things you won't have to do in any other state, most likely. Like here in my neighborhood, we have to all replace our hot water heaters, because for so many insurance companies are leaving the state that they keep adding these new requirements now. And so if it's X amount of years old, you got to replace it. If your roof's X amount of years old, you got to replace that. So of course, that's a $1,500, $2,000 hit you're going to take. And there's nothing wrong with our hot water heaters, but we got to do it if we want insurance coming up in the following year. For people who have roofs that are like 15 years old, they got to replace their roofs or they'll get insurance, right? I mean, these kind of expenses, okay? So keep that in mind when you are buying a home for sure, versus what rent's going for now. So, so we'll see if that's going to continue to get any better. Obviously, if rates keep dropping, you would think you see some people coming in, of course. Now, the inflows into the SPY. Oh, my goodness. So the S&P 500 ETF SPY sees its biggest inflow ever. And you can see this right here. Look at that. Oh boy, I mean, look at that spike. That is absolutely crazy. Now this chart only goes back to 2018, so I was able to find another one. I believe this is from Bloomberg as well, and this is the SPY ETF. Sees record inflows last week, and you see this goes back all the way to the 90s, and again, boom, huge injection. Is this some of the money coming out of money market funds? Maybe. I mean, it would make sense, right? But what else are you seeing as far as like rotation and things taking off here? And guys, before we continue, please hit that thumbs up button. I really appreciate it when you guys do that for me. It helps people find the video, which a lot of new people have been. And if you like the content, think about subscribing. I appreciate all your support. Now, looking at what people rotate into, what was killing it today? Fintech still on top, right? Biotech's another big one, right? Small tech. Okay, look at the rest of these. And so it's just those right there where money's rotating into because they've just been hammered. They're way down compared to anything else, especially the Max 7, which has been up so much, right? You can see those kind of at the bottom. They have somewhat of a green day, but they've been mixed. Okay, you got your ones that were lagging like Tesla and Google and stuff, but they've been kind of moving, breaking out. And then, of course, we go to the Qs. New all-time high for the Qs here. NASDAQ 100 is what this follows. Not a new all-time high on the NASDAQ composite. That's still about 7% down. But you can see this thing is getting pretty far above that 200 moving average now, right? So again, actually is a rubber band, still a lot of fuel in the fire, but we are 15% above, which is exactly where it was when we hit that other all-time high. And you would think at some point in time we would get a breather. I mean, you would just think that. And look at all those green candles. This is a weekly chart. And so that is a lot of green candles. But you can also see we can keep getting stretched. That's 23% right there. And then on that whole rally up in 2020, I mean, you can see it was up around 19%. So it can definitely keep going. There's no ifs, ands, or buts about that. There's no rule in there saying that. You know, you look at the SPY, about probably less than 1% away from all-time highs here. And again, I read on this that if it can break all-time highs because the S&P represents the entire market, you can see more shorts start to cover because they don't want to be in there when that breaks all-time highs because there's no resistance above it, right? So if it keeps going, they're going to get burned even more. And again, this is another one that's getting stretched. I mean, it's very far above its 200 moving average right there. We'll see how much farther it can before it gets that snapback, you know, and you can see on this rally up about 15% right there. Still has room to run. And again, I don't know what it was that 1, 2, 3, 4, 5, 6, 7, like 9 straight weeks in the green right there. You think you would be up for maybe next week would be a red or something. Maybe we trade sideways, start consolidating. Let me know in the comments what you think about that. Again, IWM though, this one just keeps running. And that's what I talk about, that 50 Fibonacci level, which would be my target before you see a decent pullback, honestly. And it's only at 1% away from it. It's just amazing. This is the weekly, so MACD is about to cross over, or actually starting to cross over that zero line on the weekly, which is good. Again, it's going for what looks like the August highs, which is what we need to break next. And then, of course, once that's broken, that's when you start heading into February highs, if this keeps going. And this is another one with a whole bunch of green candles on the weekly. And, you know, it's one of those things when you're sitting here in a melt up, whatever you want to call this, the pause rally or whatever, it's going to be hard to predict what's going to happen here because right now, I think we can all agree there's a lot of FOMO, right, coming into this thing for sure. And so what I'd love to see it come back down, hit that trend line and get a bounce. That will be much better for more of a longer term move up going in. And I just did a whole members video on how the WM does in January. So again, we'll see. It's kind of a crapshoot. Now you can see why money still rolls in because relative to the S&P 500, this has been beaten down. The S&P's been performing really well, and the Russell's been selling off for over 2 years. All right, and just been stuck in that range. So that's another reason if you're looking at valuations. Now Tesla, real quiet day for Tesla day, didn't reach the prior day high. You can see it basically just kind of traded in this small range, looking more like it's kind of just doing this wedge, getting ready to try to do a breakout. I know people were definitely selling like cash secured puts on this thing because the expectation is for it to go higher if this rally continues. Because again, this one was lagging all the other Magnificent Seven when all of them were moving up and setting crazy new highs and stuff. This one was not. And so again, down below, that's November's highs for support. Also have a RTH gap below that right there. And so if we move up, look for prior day's high around 257. And then that gray box right there is actually a fair value gap, which it'll suck up to. And if it reacts, it's going to hit it and then react down. Okay. If it cuts right through it, that is super, super bullish. But again, I expect it to react down like normal. And then, of course, if it tries to sell out of this little pennant formation, look for November's highs right there around, looks like 252 to be support. And then also there's an RTH gap, which that won't be prior day's low come tomorrow. That'll be Friday's low as support as well. Now, they did have good news coming out of China, which is why they popped this morning. Their vehicle registration surged by 19%, which was a good thing for them. Which, of course, is a good thing. In China, I mean, I don't know if I believe the data, but still, they seem to be doing better, I guess you could say, if you believe the data. Now, Amazon, obviously, we broke above this trend line. Trying to see if we're going to come back down and retest it or not. Again, this is a weekly chart. If we continue up, 157 is where you're looking at, 157, 158. We break that around 165. Sell off, I'd say look for that around 151 to get a retest of that line right there. Now Google, all it's doing is pulling a Tesla and it's wedging, right? It's just wedging right here. If we get that breakout right there to the upside, then obviously around 143.25 is going to be where you're going to. If it breaks that, 151 is all-time highs. If it breaks down, then I'll look around to see around 130.95 is actually going to be your target right there. And again, this is another one of those ones that doesn't move fast, okay? So we'll see where it breaks. PayPal, keeping it simple for you guys. It's still on this channel. The MACD looks good. And I will say one thing. I mean, that trend line, which goes pretty far back, is going to be a beast for it. The other thing that's going to be a major problem here if we bring up the moving averages is that 200 moving average actually coincides right there with that trend line. And I think that 200 to me is going to be a beast to get through. It usually is, especially for a stock like this. Fintech's been on fire for sure, but you know, watch out. So around 64, 67, somewhere in that area, 64.50 somewhere. Expect some definitely tough times right there. I mean, just a pullback. I'd see it pulling back to the bottom of that channel, or even 62 somewhere in there before a move up. And if you can get through there, oh, it's going to be an explosive move up through that gap right there. Now, BABA, hopefully for the BABA holders, this is finally a turn. I hope for them it is. Got a bullish MACD cross on the daily. Got above that trend line. Looks like it's laying right on top of it. Again, that was a support area right there. It is in a volume gap, so I'm expecting this to move up pretty quickly. If it can keep its momentum going to get up there around like 80. And then if it can break 80, next level is going to be right around 83.50. But let's just see if we can get to 80 first. That would be nice to see. And when it comes to earnings, you'll have a few. I mean, you're going to have General Mills, going to end up with Micron, so we'll see what that one's doing. It's projected to actually have a really good year in 2024, and it's had a nice move. Now, as far as economic data, once again, I don't see anything besides you got mortgage stuff, CB consumer confidence, existing home sales, some oil stuff. Mostly, though, I think a lot of people are going to be watching the 20-year bond auction at 1 o'clock to see how that goes, because that could absolutely affect yields, which of course would drive the stocks down. And so we'll have to see on that one. The 30-year went okay. I don't see the 20-year going any different, especially what's going on now. And, you know, I think we had the Bank of Japan come out and say they're not changing anything. So that's why you didn't see, you know, the dollar going crazy or anything like that. So, you know, stock's still moving up. Eventually, you get a breather. You know, you can predict it if you try, if you want to or whatever. You know, it's going to be interesting, like definitely the rest of this week. And don't forget, tomorrow, by the way, I forgot to mention at the beginning of the video, is VIX Expiration, which kind of frees up volatility some. And I think I showed you that whole list of every single VIX expiration date in this year. And it was like 90% of them, the market went red like the day or two after. And so let's see what happens on that. So, you know, we'll see what happens. So, again, a lot of participation, a lot of volume, a lot of inflows coming in, still a lot of money on the sidelines. And if the S&P hits that, watch for it to hit all-time highs. Let's see what happens, okay? You'll see if you see more short covering going on, right? Because I think a lot of people are trying to play for a double top maybe and see if it double tops and then start to sell back off. So that could happen as well. So anyway, hope you guys got something out of it. Please hit that like and subscribe button. Appreciate all you guys who watch. And I will see you tomorrow for another fun day.